Hello everyone, welcome to the virtual class of investment accounting. In previous sessions, we have discussed basic concepts of the chapter. As I said, it is one of the most important chapter as far as your final examination is concerned. So please take it very seriously and do it very sincerely. Let us have recap of previous lecture, because in previous lecture I have discussed a few important concepts. The first concept that I have discussed with you is all about investment. Second, we have discussed there are three types of transactions related to the investment, that is buying, selling and holding. Third, income to the investors, or you can say objectives for investment. Fourth, understanding the mechanism of buyer, seller and broker, and specifically the role of broker in transaction related to purchase and sale of investments. Brokerage and its effect on transaction. In case of purchase, we need to add brokerage, and in case of sale, we need to deduct the amount of brokerage. Interest received and interest accrued. Generally, the case of interest accrued is applicable in case of opening and closing balance if the notified dates, means the date of interest payment, does not match with the accounting year. X interest transactions and cum-interest transactions. These two transactions are most important transactions because you will find each and every question using the terminology either X interest or cum interest. So in this session, I will explain both these items with practicals. And last but not least, we have discussed point number 10, valuation of closing investment, that is closing stock. There are two different methods available to us for the purpose of valuation: FIFO and LIFO, last in first out. So always follow the information given by the examiner in the question. If no information is given, we need to use first in first out, that is FIFO method. So in previous lecture we have discussed these 10 important points. So let us continue today's session with the understanding of X interest transactions and cum interest transactions with practicals. Let us understand X interest purchase and cum interest purchase first. If you clear your ideas related to calculation of X interest and cum interest purchase and sell, and if you learn properly how to enter these items into journals and investment account, that is a ledger, you can score 20 out of 20 marks in the examination. This is my assurance to you. But be careful while learning the fundamentals. The first transaction available to you on your screen is all about transaction of purchase. So refer it very carefully. I have given over here, this is transaction number 1. It is related to purchase. Face value is given as a 10,000 Market rate is 102 per 100 rupees. Here it is written as 102, but interpretation of this 102 is rupees 102 for every 100 rupees. एग्जामिनर को ये कहीं लिखने की जरूरत नहीं है, आपको ये समझना है. This 102 is for 100 rupees. 1% brokerage, it is clearly mentioned over here, it is charged on face value. Remarks, these remarks is related to purchase. X interest purchase. X interest means the price of rupees 102 mentioned over here is only for security, and interest due on this security is payable extra, that we will discuss at the time of discussion of calculation. And the period is also given over here, 3 months at the rate of 12%. As it is learning process of X interest and cum interest, I have given everything ready-made to you. But in full length question, we need to calculate the period due and all other related items. But as of now, our purpose is to learn what to do when the transaction is X interest and cum interest. Let us pass the effect of these all items in our calculation. Transaction number 1, it is X interest purchase. What is the face value of the security? It is given in the table. Face value of the security is 10,000. Market rate of the security is 102. It means market value of the security is when you are purchasing from the market, 10,000 rupees given over here, multiplied by 102 market rate divided by 100. As I said, 102 per 100 rupees. So it is 10,200. Brokerage, in case of purchase, we need to add brokerage. In our question, information is given regarding brokerage. It is chargeable at the rate of 1% on face value. So face value is rupees 10,000. 1% of these 10,000 is rupees 100. So 10,200 plus brokerage 100 is equal to 10,300. And this 10,300 is known as capital cost or cost price of the investment. Why? Because the term is 102x interest. In this transaction, 102 is a rate given for only security. Amount of interest is not included anywhere in this calculation. Now, interest is due for the period of 3 months and the rate of interest is 12%. So, calculate interest at the rate of 12% for 3 months. 10,000 rupees, because interest is always payable on face value of the security, not on the market value. So 10,000, rate of interest 12%, and the period involved in this calculation is 3 months. So amount of interest is 300. So being a buyer, I need to pay 10,600 rupees to the seller. अगर मैं ये सिक्योरिटी परचेज कर रहा हूं तो मुझे बायर के हिसाब से मुझे सेलर को 10,600 पे करने होंगे। क्यों? 10,300 for security and brokerage. But on this security, interest is due for the period of 3 months. इस सिक्योरिटीज पे 3 महीने का इंटरेस्ट अभी तक जमा हो चुका है, वो भी मुझे एक्स्ट्रा पे करना पड़ेगा। क्यों एक्स्ट्रा पे करना पड़ेगा? क्योंकि कंडीशन है एक्स इंटरेस्ट। सो 10,300 rupees for security, 300 rupees for interest. So total amount paid is 10,600. Now concentrate on transaction number 2. It is all about cum-interest purchase. You can check all details. Transaction number 2, purchase. Face value is the same as earlier transaction, 10,000. Market rate is also 102, same as the previous one. Brokerage 1% on face value. Interest due for the period of 3 months at the rate of 12%. Only the difference in transaction number 1 and transaction number 2 is transaction number 1 was X interest and transaction number 2 is cum interest. I have selected these kind of details because you can easily compare calculations of cum interest and X interest. Let us have calculation of transaction number 2, cum interest purchase. Market value of the securities 10,000 rupees of face value, market rate 102, so total 10,200. Brokerage plus, because it is a transaction of purchase, in case of purchase, brokerage is added at the time of calculation of cost. Brokerage 1% on face value. Face value is rupees 10,000, so 1% equals to 100. So total amount paid is 10,300. You can check the difference in previous and this calculation. Check it. Here total amount paid is available to us at the end, and here total amount paid is available to us at this place. Why it is so? यहां पे ऐसा क्यों हुआ? Because transaction number 1 is all about X interest purchase. इसका मतलब यहां पे जो हमें मार्केट रेट दिया गया था वो सिर्फ सिक्योरिटीज का था, उसमें इंटरेस्ट इंक्लूड नहीं था। लेकिन ये जो ट्रांजैक्शन है नंबर 2, ये कम इंटरेस्ट ट्रांजैक्शन है। कम इंटरेस्ट ट्रांजैक्शन का मतलब ये हुआ कि ये जो 102 मार्केट रेट आपको दिया गया है उसमें जो भी बाकी इंटरेस्ट है वो ऑटोमेटिकली इंक्लूड हो जाता है। सो हियर फर्स्ट वी विल गेट टोटल अमाउंट पेड 10,300. So this total amount paid includes value of the security as well as interest due. So less interest at the rate of 12% for the period of 3 months. So 10,000 rupees, 12% rate of interest and 3 months. So amount of interest due on this transaction is 10,300. So capital cost of this investment is 10,000. आप एक बार अच्छे से दोनों कैलकुलेशंस को समझो. What is the difference in this calculation of total amount paid and this calculation of total amount paid? Here transaction is given X interest. इसका मतलब जो भी प्राइस डिसाइड हुई है वह सिर्फ सिक्योरिटीज के लिए है, उसमें इंटरेस्ट नहीं है. इट मीन्स वी नीड टू पे एडिशनल इंटरेस्ट. X interest means additional interest and cum interest means including interest. So the amount is including interest. We need to deduct this amount from our calculations. So in X interest transaction, you will get capital cost first and total amount paid last. In a cum interest transaction, you will get total amount paid first and capital cost last. So this is what the basic difference is in between both these methods. I hope everybody is clear with the calculation of X interest purchase and cum interest purchase. I just want to draw your attention. Calculation of purchase and sale remain same. Only the effect of brokerage is going to change. In case of purchase, we need to add brokerage. In case of sale, we need to deduct the brokerage. Rest of all other items remain same. So be very much clear for these kind of calculations. Let us have understanding of X interest and cum interest sale. Transaction number 1 is all about sale. Face value is 10,000. Market rate is given 105. Brokerage 1% on face value. And this transaction is X interest sale, not the purchase. So this is all about calculation of X interest sale. Let us calculate X interest transaction first. Information is given over here for X interest sale. Face value of the security is 10,000. Market rate is 105 for every 100 rupees. So market value of the security is 10,500. It is a transaction of sale. In case of sale, brokerage is deducted from the amount received. Brokerage, as per information, 1% on face value. Face value is 10,000, 1%, 100. So capital cost or cost price is 10,400. Again, capital cost of the securities comes first because this transaction is X interest. This transaction is X interest, so we need to receive, because it is a transaction of sale, interest for the period of 3 months. It is given over here. 3 months at the rate of 12%. So it is rupees 300. So total amount received by the seller 10,700. Total amount 10,700 includes 10,400 rupees for security and 300 rupees for interest extra. X interest means value is given for securities only, interest is extra. So same calculation as we have done in X interest purchase. Only the difference is in the treatment of brokerage over here. There is no other change in the pattern of calculation. So once you keep the pattern of calculation, format of calculation in your mind, you can answer each and every question very easily. Next, sell 10,000 rupees, market rate is 105, 1% on face value. The type of transaction is cum interest sell. period is same. Now, what is the difference in calculation because of this word cum-interest? Rest of all other items remain same. अगर आप ट्रांजैक्शन 1 और 2 को अच्छे से चेक करेंगे तो मेरी ये जिम्मेदारी है कि आपको कहीं पे भी डिफरेंस नजर नहीं आएगा, सिर्फ यहां पे ही आपको डिफरेंस नजर आएगा। और जहां पे आपको डिफरेंस नजर आएगा वो ये है, इट वॉज एक्स इंटरेस्ट सेल and it is cum-interest cell. Because of this particular condition of transaction, there is a change in the pattern of solution. Let us check. Market value of the securities, face value is 10,000, market price is 105. So 10,000 multiplied by 105 per 100. So, market value of the security is 10,500. Brokerage, as per information given to us, brokerage is 1% on face value. Face value is 10,000. So, amount of brokerage is 100 rupees. It is a transaction of sell. So, amount of brokerage is deducted from the amount received. So 100 rupees deducted from the transaction of sell. So total amount received by seller 10,500, of which 100 rupees given to broker. So net amount received 10,400. Here the nature of the transaction is a cum-interest sell. इसका मतलब यह है कि आपको जो ये 10,400 की अमाउंट मिली है उसमें बाकी जो इंटरेस्ट है वो भी इंक्लूड हो जाता है. इट मीन्स दिस 10,400 इज इंक्लूसिव ऑफ outstanding interest on the security. So naturally we need to calculate the value of the security. So we need to calculate interest for the period of 3 months. 10,000 rupees of face value given over here, 12% rate of interest, and the period is also given for 3 months. So amount of interest is 300. Out of 10,400 given over here, 300 rupees received for interest. So the capital cost is rupees 10,100. You can check over here. In X interest, capital cost comes first. In cum interest, capital cost comes at last. In X interest, total amount received comes at last, and in cum interest it is coming at first place. X means interest is extra, and cum means interest is also included in our price. So we need to take care of these things very clearly. If you are clear for both the varieties of purchase, X interest and cum interest, and both the varieties of sell, X interest and cum interest, there is nothing new in the chapter. अगर आप इस 4 varieties को अच्छे से पढ़ लेते हो, समझ लेते हो, तो मेरी आपको गारंटी है कि चैप्टर में नया कुछ नहीं है. सो वॉच दिस वीडियो अगेन एंड अगेन टू अंडरस्टैंड द डिफरेंस इन टर्म्स. एक्स इंटरेस्ट परचेज, कम इंटरेस्ट परचेज, एक्स इंटरेस्ट सेल, कम इंटरेस्ट सेल, एंड इफेक्ट ऑफ दिस एक्स एंड कम ऑन कैलकुलेशन. फॉर ब्रोकरेज, आई होप ऑल ऑफ यू आर क्लियर. Format remain same in case of purchase and sell. So let us move with 11 number point of our chapter. We have already discussed the 10 points in previous lecture. I have covered point number 8 and point number 9 with intensive calculation in this lecture, and let us learn point number 11, format of investment account. When you want to prepare your investment account, you need to prepare this account with multiple columns, debit side and credit side. First column is all about date of the transaction. This particular topic is based on different dates only, and dates are playing important role in our calculation. So we need to mention date for each and every transaction. Particular, face value of the security, amount of interest involved in the calculations that we have just completed in previous session, just before 2-3 minutes. Cost or capital cost. So we need to include face value, interest and capital cost on debit side. Same way, date, particular, face value, interest included in the transaction and cost price or capital cost. It means you need to prepare your account with 10 columns. Number 1, date. 2, particular. 3, face value. 4th, interest. 5th, cost price. 6th, date for credit side, particular, face value, interest and cost. So it is just like 3 columners कैश बुक. आपने 11वीं कक्षा में बनाई होगी 3 कॉलम वाली कैश बुक. It is same as that. We need to prepare with 3 different columns. So after doing these exercise from point number 1 to 11, let us learn last important item, that is related to journal entries of the transaction and ledger posting. Once you are clear for journal entries and ledger posting, nothing is new throughout the chapter. Let us understand these calculations again. I will include only 2 transactions over here, one for purchase and second one for sell. For the purpose of journal entries, it doesn't make any difference whether the transaction is X interest or cum interest. So feel free. Number 1, purchase, face value is 10,000, market rate is 102, brokerage 1% on face value, remarks X interest purchase, and it is due for 3 months. We have already completed this calculation earlier, but for your reference, market value of the securities 10,000, market rate is given over here 102, so 10,000 102, so 10,000 multiplied by 102 for every 100 rupees. Don't forget this. So the value of security is 102. The term of purchase is X interest. It means this 10,200 is only for security, not for interest. It is a transaction of purchase. So add brokerage. Capital cost is 10,300. Why capital cost comes at first stand? Because the nature of transaction is X interest. Now this transaction is X interest, so we need to pay interest in addition to the cost price. So interest period is given for 3 months at the rate of 12%. 10,000 rupees face value. Interest is always calculated on face value of the securities. Rate of interest 12%. and period is 3 months. So amount of interest is 300. So total amount paid 10,600 rupees to the seller. Now we have purchased this security, so we are in the role of a buyer. Pass the entry. So journal entry for this transaction is investment account debited. It is clearly written over here. Investment account debited. What to debit? It is written for your reference. We need to debit investment account at cost price, or say capital cost. What is the capital cost? 10,300. So investment account debited 10,300. We have paid 300 rupees for interest. So interest account debited 300 to bank account, that is total amount paid 10,600. So at the time of journal entries, we need capital cost as well as total amount paid. So if you calculate these items very carefully, you can answer any of the question. Now, if you are clear for this calculation and journal entries, let us move to the ledger posting. Ledger posting is not new for you because we have already passed so many entries in standard 11th onwards. So in the books of the name of the person who is investor over here, an investment account for the year ending on the last date of the year. So this is specimen for the purpose of learning. Instead of date, I have inserted transaction number 1 over here. Particular. What was the journal entry? Journal entry was, check it, investment account debited 10,300, interest account debit said 300 to bank account 10,600. Let us move. Debit side of the account to bank account, face value, we need to report face value over here. Face value of the transaction is 10,000. Amount of interest involved in this calculation is 300 and cost price of this transaction is 10,300. You can check over here. I will show you all items very clearly. Face value is 10,000. Capital cost is 10,300 and amount of interest included in this transaction is 10,300. So in this way you can pass your journal entry and you can post into ledger. I hope all of you are clear for this journal and ledger. Let us move to the next part of our learning. It is all about sell. Transaction number 2, particular sell. Face value is 10,000. Market rate 105. Brokerage is given at the rate of 1% on face value. The nature of the transaction is a cum-interest sell. And the period included over here is 3 months at the rate of 12%. First of all, we will complete calculation as required. Market value of the securities, it is given in our calculation. Face value is 10,000, market rate is 105 and the nature is cum-interest sell. So 10,000 rupees of face value, 105 for every 100 rupees. So market value of the security is 10,500. It is a transaction of sell. So amount of brokerage is deducted from the calculation. Brokerage is 1% on face value. 10,000 rupees, 1%. So amount of brokerage is rupees 100. Out of 10,500, 100 rupees deducted for brokerage. So total amount received by the seller is rupees 10,400. But this transaction is cum-interest transaction. It means these 10,400 is received inclusive of the outstanding or accrued interest. So here this amount is defined as total amount received. Recall, it is a cum-interest transaction. Now, in order to calculate the capital cost, we need to deduct the value of the interest accrued or due. Period is 3 months at the rate of 12%. So 10,000 rupees face value, 12% rate of interest, and months 3, 300 rupees. So capital cost of this investment is 10,100. Now pass journal entry for this transaction. We have received the amount. Total amount received is 10,400. So bank account debited 10,400 to investment account. This account is credited with cost price, and cost price is 10,100 to interest account. In case of purchase, we have received investment and we have paid the amount. And in case of sell, we have received the amount and paid the cash. So always try to differentiate transactions of receipt and payment, that is sell and purchase. I hope all of you are clear with these calculations. Let us move to the ledger posting of this transaction. We have already passed this entry for purchase. Now for sell, instead of date, I have inserted number of the transaction. Let us visit the entry first. Bank account debited. So it is posted on a debit side of the bank account. To investment account credited. We need to pass effect of this 10,100 on credit side of investment account. To interest account credited 300. So we need to post this 300 even on credit side. Check it. Credit side of investment account. Number 2, instead of date, we have inserted transaction number. By bank account, 10,000 rupees of face value of the transaction. You can check, it is given over here, 10,000. For the reference, we need to enter face value over here, 10,000. Interest involved in this calculation, you can find directly from here. Interest included in this transaction is 300. And cost price or capital cost that we have derived from our calculations, 10,100. So in this way, you can calculate cum-interest purchase and sell, ex-interest purchase and sell. Whatever the nature of the transaction is, we need to pass journal entry for purchase, investment account debited, interest account debited to bank account, and for sell, bank account debited to investment account to interest account. Journal entries remain same throughout the chapter, only for two types of transaction, purchase and sell. And after passing journal entries, how to post these entries into ledger, that you know better. I hope everybody is clear with the pattern of calculation and mechanism of solution. Revise lecture number 1 and lecture number 2 once or twice to understand the principles of investment account and fundamentals of the calculations in order to secure marks in full. See you in next virtual class. Thank you. God bless you. Keep learning, keep growing.